We're back, everybody. Welcome back to the Dividend Diplomats YouTube channel. Lanny, for the Dividend Diplomats, this may be the first video recorded in the post-Baker Mayfield era for the Cleveland Browns here, as he may have played his final game as a Brown, or maybe not. We'll see what happens in this offseason.
Well, before we talk about the Cleveland Browns, smash that subscribe button. Give Bert, the Hurt, and Lanny a nice thumbs up. Turn it blue. It takes 3 seconds. We appreciate it. Each like helps us reach that one more person out there talking about investing, dividend investing on that road to financial freedom, baby.
And the trading in 2022 has picked up exactly where it left off in 2021. The stock market is not cooling off just because there's a new calendar year. It is still hard to find an undervalued dividend growth stock out there after Green Day, after Green Day, after Green Day in the market.
What Bert's saying is he really would like some Dookie out there in the market.
Yeah, I was trying to think of how to bring in a nice Green Day reference for a song in there, but I was running out of them. Tonight. I'm a little low on fuel, but that being said,
you could always say, "Welcome to paradise."
Yeah, I mean, hopefully you can wake me up before September ends because I should be buying some stocks before that happens. But all right, well, the stock market doesn't cool off.
I don't know about you, but our viewers, I hope you had the time of your life.
Yeah, all right. They probably all think we're two American idiots in here, so let's just keep this thing going here. In all seriousness, the stock market has started off hot here in 2022. The S&P 500's PE ratio is above 30x once again after cooling off into the only mid to high 20s to end 2021.
Tell you what, I mean, we might be on the boulevard of broken dreams, but we'll have to see what the S&P 500 has in store for us in the remaining 11 and a half plus months. I mean, I really hope, Bert, you don't throw some basket case during this video that really throws the viewership in a loop.
Yeah, it's better than the boulevard of broken dividends, I guess, which is what we felt like we were having during the beginning of the pandemic at 2020. No, in all seriousness, this has been great so far. We are crushing it. Might just start throwing it. Man, we're going to go 90s band all the way through here. So moving into some of the things, what are we going to talk about today? We are going to look at one dividend stock here to see if it is an undervalued dividend stock to buy. Lanny and I both own this company. We've had it in our portfolio for at least 3+ years. It's been an interesting company since we owned it. It's gone through a few different name changes in different transactions, as you're going to see. And it may have even been featured or a part of this company on one of our recent videos here. Isn't that right, Lanny?
If you haven't caught the last video, I talked about the stocks that I am selling. And with that was one stock out of this cluster of a bubble. It's almost like it's like the snippet from The Office. Snip, snap, snip, snap, snip, snap.
I just saw that episode the other day too. I just randomly popped on. Yeah. It is definitely one of the best episodes. And I mean, hey, the dogs got to eat, the dividends got to eat. We got to grow our passive income. So the company that we're going to talk about here is one of the companies that is in the better parts of the spinoff, I would say. Today, we are going to feature Dow Inc., ticker symbol DOW, not to be confused with the former Dow Chemical, which the company was 3+ years ago. To take you on the quick history ride, you had your Dow Chemical, which is the company that Lanny and I purchased when we started our investment journey here. Dow Chemical merged with DuPont, became Dow DuPont. Two companies came together, make one powerhouse in the sector, split off into Dow Inc., DuPont, which Lanny just sold, and then Corteva, which we still both own. So we're going to focus here on Dow Chemical, especially because it competes with one of the companies we continue to talk about on our YouTube channel, Lionel Basel, ticker symbol LYB, and it's a company that Lanny also owns in his portfolio too.
That's right. I mean, I know, Bert, you own obviously Dow Inc. still. Dow Inc. is still a spot in my dividend stock portfolio, but it was pretty interesting when you started putting the metrics together for this, obviously massive company, which, Dow Inc., ticker symbol is Dow, DOW. They're currently trading at $58.41. They had a very mediocre 2021 year. Seems like they were only up about 5% for the year. Isn't that right, Bert?
That's about right. Yeah, it's kind of been stuck in neutral the last 52 weeks when we know the stock market has climbed nearly 30% over the same period.
Right. And, I know you're always looking for high dividend growth, undervalued dividend stocks. So that's why this one's very intriguing to me, why you're evaluated. So, Bert, what's the reason why you're looking at Dow right now?
Well, when you talked about your selling video specifically last week, one thing that resonated with me was owning just a lot of positions and how nice it was that you're shedding 3 positions and you have 3 less companies to look at. So as we were doing research to find undervalued stocks to talk about in this video, I wanted to kind of keep it close to stocks that were in my portfolio to see if I should just continue nibbling and adding small pieces to keep growing my position in the company. That is why Dow kind of jumped out on here. I've been a little jealous. I haven't been adding to Lionel Basel and haven't added to my position. So, why not look at a competitor to see how their metrics stack against LYB to see if I should start adding to Dow.
Well, Bert, it's time to look at the Dividend Diplomat stock screening metrics for Dow Inc., ticker symbol DOW, price to earnings ratio less than the S&P 500, possibly less than the competitors. The dividend payout ratio as the second metric. We look for that under 60%. And obviously, Bert has that perfect sweet spot of 40 to 60%. Third is the illustrious dividend growth. You want your passive income stream in the form of dividend income to grow automatically without you having to do anything after owning the dividend stock. Last but not, you could say, it's the cherry on the top if you pass through the other metrics, the dividend yield, which is how much money they're paying you.
That's right. So let's jump right in. Stock price is closed as of January 4th, 2022, the second trading day of 2022. Dow's price was $58.41. You divide that by the 4 EPS per Yahoo Finance of $6.43, gives you a PE ratio of 9.08. So way under 10 here and way less than that S&P 500 PE ratio.
It sounds like it's very consistent within the industry then, because Lionel Basel, if you remember, they're in that like 7.5 to 8.5 range. Obviously, probably trading a little bit higher than that now on a PE ratio based on the stock price appreciation that the market is seeing. So they're pretty similar to Dow. So yeah, Dow being at 9 seems pretty fair right now.
Yep. And moving into that second metric, their annual dividend is $2.80. You divide that by the 643. That gives you a sweet, perfect, knock it out of the ballpark payout ratio of 43.55%. Can't ask for anything better, can you, Lanny?
You can ask for 42%.
That's fair. Why not 41?
It keeps getting better.
Yeah. We got a lot more numbers to go before we hit 0, everybody.
Well, you don't want to hit 0 because that means there's no dividend. But
maybe they're going to say good for that dividend.
Oh man, Bert busted out the technical title of the song of Time of Your Life, which I think is good written. So very touche there, Bert. So the third dividend stock metric of Dow Inc. is dividend growth. And this is where they don't shine. This is where they truly do walk the boulevard of broken dreams. They have not increased their dividend since the spinoff in spring of 19. So yeah, going on 3 years ago. So Bert, what's the deal there?
What's the deal with airline food? I guess who really knows there? I mean, the company's trying to figure out its way. We don't really know. But I mean, yeah, that's the one thing. That's the one black mark here with Dow compared to its competitor. It's kind of gotten lost in the noise of this transaction. Dow was increasing its dividend before it decided to embark on its journey on making the most confusing set of transactions possible. So obviously, we'll look to see if the company goes to dividend growth with a 43% payout ratio, though, and strong cash flow, strong earnings as they feature in their last earnings release. We can put some of the clips of their highlights from the earnings where you can see strong growth, free cash flow, and how they want to return cash to shareholder. There is room to grow that dividend in the future if they want to, and maybe 2022 is the year they bring back that dividend growth.
They may be able to say, when I come around. Now,
love it.
Dow has a chance. What you're saying. So management, you were saying that management targets a return of 65% of net income to shareholders. Now, that means that there is quite a bit of room to go with that payout ratio being only at 43%.
Yep, that's exactly right. I mean, you can't predict. We don't have a crystal ball. So much can happen during the year, but it would be very nice to see them start growing that dividend there. I know that's something I'm going to be looking for to learn more, see what's going to be coming up as they release their earnings once again at the end of January.
We'll have to find out. And Bert, I know you like this dividend yield, that bonus metric. Obviously, they pay a nice quarterly dividend of 70 cents per share per quarter, or $2.80 per year, almost 5% dividend yield at 4.79%.
In line with the competition there. I mean, it's a strong dividend yield. There's no doubt about that. Our dividend growth factor is 4.79 because you add the dividend yield plus the dividend growth. So obviously, dividend growth is going to be key here, and learning a little bit more about that dividend growth is going to be nice because you know what? That's a great dividend yield. It's well above that 0.5% savings rate that you can get at Ally Bank and so many other places. So that's good to see at least.
You know what I like what you did here too, before we summarize the stats, is Dow's got a pretty clean balance sheet, or it's getting cleaner like you were saying. I mean, the debt's down a few $billion this year, or in the last 52 weeks. The current ratio, which is how liquid of a company you are, it's how quick can you pay your current liabilities with current assets, 1.6 times. Now, Bert, I need you to talk about this quick ratio because that one almost had me floored.
The quick ratio is 1x. So even with that, it is still above 1, the number that we are looking for. Strong balance sheet.
Very strong. So, Bert, to summarize, we have a PE ratio of only 9 times earnings for Dow. You have a payout ratio, a dividend payout ratio of under 44%. Dividend growth, not there yet, but you're saying there's a chance. Dividend yield, just under 5% at 4.79%.
Yeah, so here's the big question, Lanny. Is this when I come around to buying Dow and adding some more to my portfolio?
Is it, Bert? You got to tell us. Is this time where you make a move on Dow?
In all seriousness, the metrics are looking great. You obviously want to see stronger dividend growth. There's no questions asked. They haven't grown it since the spinoff. You want to see something there. If I were to nibble and potentially add 5 to 10 shares now at the company's price, it's kind of banking on that future dividend growth, which when you look at the metrics, you're kind of setting the table for a potential dividend increase here in 2022. And meanwhile, while you're potentially waiting for that growth, you're getting a yield of nearly 5% on your cash that would just be sitting there in a lower yielding savings account there. So yeah, I mean, I wouldn't mind adding a couple of shares and building up that Dow position a little bit there. I like how you have a strong Lionel Basel position and how you have a Dow position too. I don't have the Lionel Basel, so maybe it's time to start beefing up my position in this sector.
10K, 10K, 10K. I think, Bert, you know, how much of Dow do you currently have? Do you know off the top of your head?
That is a fantastic question here, Lanny. As I pull up my portfolio, which you can also check by going to our website there, we put our full portfolios on our blog, and we'll put a link here in the comments. I actually have a very small position in the company. I only have just under 15 shares of Dow. So maybe another 5 shares are on the horizon here in the short term, 5 to 10 shares. How about this, everybody? I loved what you did last time with Lionel Basel. Let's roll that forward here. Get this video to 300 likes, 10 shares of Dow right there. That'll be the reward for getting it to 300 likes.
Guys, like this video. I want to see Bert start pulling triggers on some dividend stocks here. Let's see him get to financial freedom by bolstering that passive income stream. So guys, what would you do if you were Bert? Or what would you do in general? Do you like Dow Inc? Are you buying this stock right now? Are you kind of on the sidelines? Or are you just holding? I'm just going to hold my position, but it sounds like Bert's interested in adding to this chemical stock, really rounding out that position, possibly getting to over $1,000 invested.
Yeah, that's absolutely right. And I think one other, the ex-dividend date that's going to be coming up here, I have probably until the end of February. So I have some time to keep building that position over the short term if I want to capture that next first quarter dividend.
Guys, leave the feedback in the comments. If you haven't already, definitely subscribe to the channel. Let's get Bert to the number of likes. Bert, how many do you need again? 300?
Yep, 300 likes. I'll buy up 10 more shares of Dow. You got it.
Well, time to get all my burner accounts ready. No, I'm kidding. But guys,
All right, Kevin
we appreciate the support. That was Bert, and this was Lanny from the Dividend Diplomats. Over and out.